I mean, the end of a fiat money or a paper money system is always the same, and it's always hyperinflation. And we've seen it exactly that happening over the last 3, 4 weeks again. Big pressure in the markets, banks going bankrupt. We had a bank run in America, and the response immediately is to print money. And that's how it is going to continue.
We're talking about Bitcoin, stocks, gold, and the crack-up boom with our next guest, Florian Grummes, Managing Director of Midas Touch Consulting. And Florian told me offline he is not so bearish on the markets. We're going to find out why. Florian, welcome to my new show. Thank you for joining me.
Thank you, David, for having me. Pleasure to be here. Congrats on your new show.
Thank you very much. I want to first talk about the crack-up boom before we get to your broad market outlook and how everything ties in together. For the audience who may not have seen our prior interviews before, what is the crack-up boom and how does that apply to today's situation?
Right. Let's start with the definition. The crack-up boom basically is an economic crisis that involves a recession in the real economy and at the same time a collapse in the monetary system, due to the continual credit expansion and the resulting unsustainable rapid price increases. So the crack-up boom is characterized by two main or key features, which is excessive expansion of the monetary base or monetary policies, and that step by step leads to out of control inflation expectations. So there's a psychological component already. And the second key feature is that at the end, a resulting bout of hyperinflation, basically, which will end in the complete abandonment of the currency because the market participants have no trust anymore. And at the same time, of course, you have a recession in the real economy, and it basically means the crack-up boom is the crash of the credit and the monetary system due to the continual credit expansion and the price increases that are not sustainable in the long term, and the people losing faith into the money system. So that's the general definition. And of course, we are not there like in full force, but I think partially you can agree that inflation expectations have changed. I mean, a few years ago, people would never talk about inflation. Nowadays, you consider buying things rather now than waiting a year because they might be more expensive already. At the same time, people are not willing to lower their prices anymore because they know that prices have gone up already. Everybody else has increased their prices. So why should I lower my prices or continue to work for the same price? So this is a process that has started 2.5 years ago. And I don't think that it's going away. At the same time, I mean, we've seen it over the last few weeks. Immediate response to the banking crisis was basically, again, printing money, flooding the system with liquidity, something that has been done for 15 years since the financial crisis in 2008. Yes, Powell has tried to basically maneuver a turnaround over the last 12, 15 months. But as we know now, he's not been successful. What we have always been saying, they will break something with this brutal tightening cycle has happened already. And I think that we might see maybe one more interest rate hike over the next at the next meeting, but then I think it's done. And I think in a few weeks or months, we're already talking about lowering the interest rates again because there is just too much problems in the markets.
Can you give us a few important historical precedents of a crack-up boom happening, just so the audience can visualize what this means in with real examples?
Well, I mean, the most famous one, obviously, is the German hyperinflation in 1923, which also was in the making for many years. And then the final stage basically happened rather quickly. And within a year, prices exploded dramatically. And you were only able to save yourself basically with gold. And to a certain extent, maybe with real estate and stocks, but still you would have not been able to make a performance like you did with gold. And everybody who held their money in either physical banknotes, paper money, or in the bank account, they lost basically everything. And this, of course, devastated the German society, and basically was one of the reasons for the Second World War 15 or 17 years later.
What similarities do we have now in America? We don't have hyperinflation now to the same extent as Germany in the early 20s, rather. But a lot of the other macro forces you pointed out are very similar. So to what extent can we see a rehash of this happening in America?
I mean, the end of a fiat money or a paper money system is always the same, and it's always hyperinflation. And we've seen it exactly that happening over the last 3-4 weeks again. Big pressure in the markets, banks going bankrupt. We had a bank run in America, and the response immediately is to print money. And that's how it is going to continue. And the amount of money that is necessary to be printed is getting bigger and bigger and bigger. And we're talking such big amounts of numbers nowadays. If you compare this with like 15 years ago during the financial crisis, yeah, it's going to be bigger and bigger. And I think it's unfolding in stages. Yes, we don't have hyperinflation right now, but I assume to save themselves, to save the system, to save the financial system, they continue to print more and more money whenever there's stress appearing. And there is so many reasons now that they won't be able to continue their hiking. I mean, look, they tried to tighten the balance sheet for 12 or 15 months, and within 2 weeks, 2/3 of it they had to print again, basically, or it's not working, and people have to realize this. But of course, if you or I would be working at the Fed making these decisions, we would probably have to do the same decisions like they're doing, because otherwise we would be risking a complete anarchy and breakdown of the system immediately. And so.
Okay, so let's suppose you're right, Florian, and that in the West we do see a crack-up boom scenario play out. What does this mean for asset prices? Let's start with the stock markets, and then we can talk about gold and Bitcoin.
Well, again, I mean, to keep the system running, they need to print more money. And that means that overall stock markets will go higher. You might not see them outperforming other assets like gold or Bitcoin. And of course, within the stock market, you will have certain stocks performing much better than others. But generally speaking, if we are on the road to a cracker boom and hyperinflation over the next few years, stock market should go up.
What's your base case view then for stocks over the next year or two, given that we did have a very good Q4 for both the NASDAQ and the stock markets, or the S&P 500. In fact, the NASDAQ had the best Q1 in 2023 since 2020. So is this renewed momentum, you think?
Yeah, and I mean, don't forget, it surprised nearly everybody, right? Because everybody was super bearish in October last year. The hedges, especially by the retail traders, have been unseen and unheard of. And what happened was a big short covering rally, which then transformed into a bull market, basically, in stocks. And now the latest numbers again show that the retail investors and traders have once again ramped up their hedges and their shorts to protect their stock market positions, which again tells me that markets will not crash, they will not go down. Instead, much more likely they will go sideways or higher from here, probably even higher from here, because yeah, if everybody's short, the opposite will happen. And I think smart money, you have to be careful. There's also lots of indicators that could be misleading, but generally speaking, I think that smart money is rather buying than selling, while the dump money, so to speak, is rather hedging and buying shorts. And of course, if you're short and the market is not going down, you have to cover, and that means you will be the next buyer driving the market higher. And so I'm not like a super stock market bull here, but I'm not in the camp expecting a crash in the stock market. I think overall stock market probably sideways to higher. And yes, you will have the typical volatility and very likely a few weeks or months. Typically, seasonality wise, it's going to be August, September, a little bit more challenging time for the stock markets. But overall, I think given that the market, that the Fed basically has already turned around, even though they're not saying it, but you have to look at their actions. I think that overall stock market will drive higher.
We're talking offline. Unemployment today in the U.S. came out. The data came out, and 3.5% was the latest number, which is down from 3.6% the previous month. So slight drop in unemployment, even though everyone's calling for, well, not everyone, but a lot of people are calling for a recession. And we see headlines of companies every week laying off workers. But Florian, you're based in, right now, I know you're based in Germany. Tell us how the ECB is positioned in terms of monetary policy. Are they done rate hikes as well, or are there more to come for Europe?
Well, I mean, they believe that they can do more. I doubt it seriously. They have been 2 steps behind the Fed. Now the market is starting already for a few months, starting to price in that the Fed will stop their rate hiking and their tightening before the ECB, and that's why the dollar got weaker and the euro got a little bit stronger. And probably the Fed is still ahead, and so they will pivot first, but I don't think that the ECB can continue that for much longer. The bankruptcy of Credit Suisse has already created shockwaves here in the European banking system, and it would be foolish to continue hiking interest rates here. But you don't know. I mean, these people have no clue about markets. I mean, these are all theoretical people, have no real experience in markets. I mean, Madame Lagarde is a lawyer and not a trader or an investor or a fund manager. So this is the people that running the central banks, not only in Europe, but also in America. And so you have to be very careful. This is all very theoretical, what these people are doing, while the markets are real.
Well, their theory aside, if they are determined to raise rates a few more times this year, would that not cause the euro to rise vis-a-vis the dollar this year? Are you then bearish on the dollar?
Yeah, I mean, that's what if you remember the last time we talked, I told you we talked about the de-dollarization. And I think that's the big trend right now, harming the US dollar. It's more and more obvious that China is taking over the leadership on that planet, and that the West in general is not strong enough anymore to counter that. So you've seen Saudi Arabia basically moving to an alliance with China and Russia. And they start trading oil in renminbi, and the Saudis can then exchange their renminbi at the Shanghai Gold Exchange against gold. And that, of course, is not only driving the gold price high because there is a physical gold trade happening now, but it's also driving the US dollar lower because the days of the US petrodollar are basically done. I mean, this is the last 50 years, the Americans have been able to force their US dollar on the rest of the world because any oil trade had to be manufactured in US dollars, and that's done. I mean, the Indians, the Chinese, they now trading and buying their oil in renminbis or in rupees, maybe even in rubles. So things are changing, and it's a drastic change, and it's actually unfolding very rapidly now. And unfortunately, the people in the West, the politicians in the West, and also the central banks in the West still believe that we are in the same setup like the last 50 years. And the wake-up call is already happening as we speak.
It's interesting. The de-dollarization trend has been in the headlines. And it's been in the headlines for a long time. This is not a recent trend. We saw that the US dollar now occupies about 60% of global trade. A few decades ago, it was 80. So this trend has been downward for the US dollar, like you say. But Florian, even supposing a few decades it goes to 40%, right? If you assume the same trajectory, that's still a dominance, right? Because that implies the other currencies collectively are the other 60%. Another currency would have to be greater than 40% of global trade to surpass the US dollar in trading dominance, at least from the trading perspective. Do you see that happening? Do you see one currency dominating the US dollar, or do you see the US dollar being just one of many reserve currencies in the future?
Yeah, no. I mean, I don't think that the yuan is going to take over in the next few days, weeks, months, or years, for sure not. But just for the US dollar coming down from that dominance will make a big change. And I think the current exchange rate is kind of reflecting it already. And I think the dollar is going lower from here. We had a massive multi-year top last year in November. And again, there are so many macro factors at work now that I think that the dollar is going lower, which obviously will be very helpful and bullish for gold. It will also help Bitcoin. It will help the stock markets. It will help commodity prices. But of course, if you do your trade, if you do your investments, if you do your business in US dollar nominated currency, then at some point you will questioning if this is the right currency for you to continue to work with, right? If you see that it's constantly losing value, similar to what Europeans experienced last year. I mean, if you were running a business in Europe in euros, having your cost base in dollars, and the euro got weaker and weaker, and in the end, if you did the calculation against the beginning of the year, your euros were down 10% or even more. You could run a good business but still lose money because of the currency, the weaker euro back then. And I think something similar is now happening to the dollar.
Now, Florian, long term then, which other currency would you be positioned in? And let's say if you were short the dollar, you had to enact a pair trade, short dollar, long something else. What would it be?
Gold and Bitcoin.
Okay, let's talk about gold then. All right, gold has been on a tear, right? Breached $2,000 twice this year. What's your medium-term outlook?
Well, let's start with the short term, because I'm a little bit skeptic that gold can immediately start run higher to new all-time highs from here, because I see too much optimism wherever I go, wherever I look, whatever I read. Everybody's bullish. Everybody's expecting new all-time highs right now. I wouldn't be surprised if it takes a little bit longer and maybe we have one more pullback, let's say 1900, 1920 over the next few weeks or months. Usually the seasonal cycle for gold is not very supportive in spring. Usually you get an important low somewhere in June, most of the time July or early August. And from there you see a strong rally. And that would be the rally that could take gold towards $2,500 until the end of the year. So I'm a gold bull. I think very short term, I'm a little bit cautious. I think people are too bullish, but in the medium term, I think that gold will go to new all-time highs, and I think 2,500 by the end of the year is possible.
I'm not bringing this up just to have a clickbait headline. I'm not going to put this in the headline, but I remember many years ago when we first spoke, you know what I'm going to say with this. $9,000 gold, I think, was your long-term forecast. It's not happening this year, but walk us through the rationale here. I mean, just let's get an understanding of your thesis.
We are in a gold bull market since 2001. The first leg up was from 2001 until 2011, took gold from $250 to $1,920. Then we have been in a 10-year consolidation correction kind of period for gold. Now gold is challenging the all-time highs, which we've seen 2 years ago, 2.5 years ago, 2075. Gold's been running against this $2,000 level. More and more people waking up, realizing that saving your hard-earned money in fiat currency like the dollar or the euro is not really helping, because you're losing against inflation. Gold has always been a strong inflation hedge in the long run. And gold has been around for the last 5,000 years. Nothing else has that kind of track record. Gold has survived any king, any military dictator, any revolution, any hyperinflation. Gold has survived them all. And it's basically building that setup now where so many parts coming together in this puzzle. And I think once gold really manages to break out now, also technically speaking, it's a very large 10-year cup and handle pattern in the making. I think it could easily run to $5,000 to $10,000 over the next 2 years. And again, going back to what we initially talked about, they will have to print so much more money to keep the system running that this will easily take gold to $5,000 to $10,000.
$5,000 gold, let's just take $5,000 gold, okay? $5,000 gold is roughly 2.5 times currently what we are now. Does that imply necessarily a 50% devaluation of the dollar? Is it a zero-sum game, or not necessarily?
If you are a dollar investor and you buy gold, you're basically selling your dollars against gold, and that means yes, if gold goes up 50% in dollars, your dollar is down 50%, and you can buy 50% more in gold than you would be able to do this in your dollars. So, and again, going back to what we also talked about in the Weimar hyperinflation in 1923, that was the only way that people were able to save their hard-earned money in physical gold outside of the banking system. And there are stories where people were able to buy a house with 1 ounce of gold at the peak of the hyperinflation. So, I mean, I can tell you personally, my family, my grandfather from my father's side, he got the gold in the garden, hide it in the garden, and he was able to buy a few houses during and after the hyperinflation, and the family did really well. The family of my mother, they were completely in paper assets and in the banking account, and they lost everything. They lost everything, and that has a huge impact until today in the psychology of that part of the family.
Wow. Okay. Hard assets. So hard assets is what we should be positioned for in a hyperinflationary scenario. How about real estate then? Is real estate also a hyperinflationary hedge or not?
It's already better than paper money, of course, but it's not an ideal investment. I mean, the house or the apartment that you're living in by yourself or with your family, of course, is necessary and makes sense. And there is also a return on your investment that maybe cannot be measured in percentages or in dollars or whatever. But I would not dare to have a large amount of my net worth in real estate and hoping I go get through the hyperinflation really well. I don't think so. Because it might be nominal terms, yes, but in real terms, and that's what's basically necessary. I mean, hyperinflation means inflation 50% and higher constantly every year, many years in a row, or many months in a row. So I don't think that people will have the means, the necessity to constantly buy more houses, right? In the stock market, you can do it rather easily, but remember, just the real estate transaction itself is not something that you can do so quickly. So, and in a hyperinflation, the velocity of money is constantly increasing. So real estate will not be very helpful, I think.
Unless your real estate is an NFT. I've heard people doing that now, but that's a different conversation. Yeah. Then you can just trade it on OpenSea or something where variables. Look, I
mean, the tokenization of those assets will come, right? It will come over the next few years. It's still early stage. There's still a lot of concepts who went wrong, and there's a lot of scam in the sector. People now need to figure out again, like how to move forward in the crypto and Web3 space. But tokenization is a big topic, and of course, it will come for real estate as well. So down the road, in a few years, it could be that you will be able to transact much faster. I mean, we also talked about this in one of our videos already. I think that in India, with the digital identity guaranteed by the central bank, people basically can trade their houses or their real estate in a restaurant while eating quickly, swap real estate via their cell phones because they have a verified identity from the central bank. But we're not there in most of the Western countries.
Let's talk about Bitcoin, another market you closely follow. Again, done very well recently. So where's the momentum, up or down?
I think Bitcoin is going to 50K in the next few months. So I slowly started to become bullish in December. I said back then that Bitcoin is not reacting to all the bad news anymore. And I think in early January, I laid out my plan for the year, and it's been I expected until mid of June, 50K in Bitcoin. And so far, it seems like following the roadmap here. Usually, April and especially May, early June is a very strong seasonal window for Bitcoin. And it's sitting now at $28,000 for a few days already, or even 1 or 2 weeks. It came roaring back after the banking crisis. More and more people realizing, and I think also more and more institutional players realizing that they need an asset that cannot be seized over the weekend by Fed government and politicians. So I'm very positive in the short term. I'm not sure. I don't think we're going to see new all-time highs this year, but I would think 50K, roughly speaking, let's say 45 to 50K in Bitcoin over the next few months. Then another pullback back down to 25. That's basically what I'm expecting for the rest of the year.
Oh, another pullback down to 25 in the same year, Florian?
Yeah, this, I think, together with some weakness in the stock market, maybe in September. But next year is the halving, and then I think we're going to see new all-time highs. But remember, I don't think we're going to see the old favorites amongst the altcoins. It's going to be new ones, and it's still too early to really say which those will be, because I think they're still brewing something in the sector. It still takes some more time to figure out what's actually going on. It's been very devastating last year, and it takes time to reorganize and create something new, basically.
Well, the market hasn't seen even $50,000. We haven't seen that for more than a year. I don't think.
Right.
So
it's still the surprise. The surprise is still to the upside in Bitcoin, and also if you compare it with what happened in 2019, that would basically be the roadmap. So rather a quick rally in April, especially in May and June, and then probably topping out in the summer, pullback towards autumn. And then it's a buy again for next year when we have the halving, and then I think Bitcoin is good to go for 100K.
100K by next year after the halving. So just this year, Florian, then if you let's assume that Bitcoin goes to $50,000, that's a roughly 80% to 100% increase from today's level. Let's say 80%, and then gold is, let's say, it goes to 2,500, which is 25% increase. Are you then assuming that Bitcoin will outperform gold this year?
Yes, it's already outperforming gold quite a lot. So that's something that people have to be aware of. I'm not in the camp you have to put everything into Bitcoin, by far not. I mean, it's just too volatile. There's still a lot of question marks around this new asset class. It's viciously being attacked by politicians, the Fed, central banks all over the world. But you want to have some exposure to Bitcoin, because it's outperforming everything again. Bitcoin in a risk-on scenario, in a cracker boom scenario, in an inflationary scenario, Bitcoin is the fastest horse.
I've asked you this question, I think 3 years in a row now to close off the interview, and you've always been right. First, 2 years ago, I asked you what will be the best performing asset by year end. You said Bitcoin. That was correct for 2021. In 2022, you said gold. Relative to Bitcoin, that was correct. Gold outperformed Bitcoin and stocks last year. What about this year? We're 4 months in. 8 months after today, what's going to be the best performing asset year to date?
From today onwards.
From today onwards, well, let's count for the whole of 2023. So starting from January to the end of December.
Bitcoin is up quite a lot already. It will be challenging for both to catch up. So from that perspective, I would have to say it's going to be Bitcoin, because I don't think it's going back to making new lows. I think we've seen the lows in Bitcoin. As I said before, yes, we could have a pullback again, maybe from 45 to 50K back down to 25. But that would take half a year, like the second half of the year. And then still Bitcoin would be performing better than gold, even if gold goes up to 2,500. That's what it is. Gold is old school, it's slower, it's more conservative, but exactly that's what you needed last year when everything was falling. People were very happy to have gold, and it was a safe haven in your portfolio. But again, in a risk-on scenario, Bitcoin will outperform everything dramatically.
All right. Well, let's keep tabs on that. Thank you, Florian, for your thoughts. And where can people follow your work?
Midas Touch, MidasConsulting.com. We also have a free Telegram channel where I share all my insights, analysis with. It's basically a mastermind group for people from all over the world. It's free, and it's a bunch of really good people helping each other. So I can welcome everybody there.
All right. Well, I'll put those links in the description down below. Check out Florian's work in his newsletter. Excellent insights, regular updates. Thank you for sharing your thoughts and your time with us today. I appreciate it.
Thank you, David. Pleasure, like always.
And thank you for watching. Don't forget to subscribe.